Okay.
The
So we
directors
are
of
doing
W
this
Limited.
October, November 2023, some paper 43. Can you read the question for me?
Yeah. The directors of W Limited are considering the purchase of a specialized machine IM to manufacture a product which has a product life of 3 years. They
Okay.
have two options. Option
Yeah.
1, to buy an old model IM3, a used machine. A major improvement on the machine is required if it is bought. W Limited has experience of using this model in the past.
Okay.
Then option 2, to buy the most recent model IM8, a new machine.
Okay. So option one is the old and option two is the new model.
New.
Okay.
The variable operating cost of $4.80 per machine hour is the same for either machine. Both machines will be depreciated using the straight line method with no residual value. The
Okay.
selling price is $52 per unit. The estimated sales in units are as follows.
Okay.
So they've given that for each year, and the further information has like the amount.
This is the annual production capacity, purchase price, cost of improvement, and annual fixed overheads.
Hmm.
So what was the first question that they have asked?
Prepare a statement showing the net cash flow for each year from year 0 to year 3.
Okay. So from year 0 to year 3. Okay. How do
Yeah.
you do that? Year 0, 1,
So
2, 3.
yeah, I did it in the alternative presentation.
Okay. So you have the year 0, 1, 2, and 3. Okay.
Yeah. So for
First thing
the
you
first
have what?
machinery,
Yeah.
the
Name
purchase
it.
price of it,
Yeah.
to which you'll add the cost of improvement.
Okay. These are the
And
only
then for
two
year
costs.
one, hmm?
This is the only two cost
Yeah, for the investment cost, yeah.
for year. Okay. For year 1.
For year one, you'll have to calculate the sales,
Hmm.
which will
How will
be
you calculate?
52 into 12,000.
Okay.
And
You
then
can calculate
for your,
sales for year 2 and 3 also.
yeah,
18,000 into 52 for year 2
but
and
you won't do
10,000.
18,000, you'll do 15,000
Why?
because the maximum capacity is 15,000.
Very good. So 15,000 into
52.
52. Hmm. Okay.
Yeah. Then you get it for year 2 and 3 also, like that.
Okay. Then,
Then for operating cost, you'll do 4.80 into the units that you produce. So into 12,000, into 15,000, and into 10,000.
this is per machine hour, right?
Oh yeah, you have to do it into 5 also, into 5 and then into
So
all of the this thing.
4.80.
Into 5 and
Yeah.
then into 12,000.
Okay. 4.80 into 5 and into 12,000.
Yeah.
Okay. For year 2, it would be 4.80.
4.80 into 5 into 15,000.
Okay. Year 3 would be
4.80 into 5 into 10,000.
okay. So this would be your operating cost.
Yeah.
Then how about the fixed overheads?
So for the fixed overhead, you'll have to remove the depreciation cost
Okay, so what is the depreciation cost? Why you removing the depreciation cost?
because it's a non-cash expense.
Okay, so you will remove depreciation cost. How will you remove depreciation cost?
You'll do the purchase price, which is 141,000
Hmm.
plus 57,000
Hmm.
divided by the amount of years,
So the useful
uh,
life.
the useful life. Yeah. So it's 3 years. So
So
it's
depreciation
66,000.
per year is
66,000.
depreciation per year is 66,000. So for your
Hmm.
fixed overheads, you will remove
Minus it
66,000.
from
Hmm. So your fixed overheads will remain fixed.
Yeah, so it's 261,000.
Okay, so how you get the net cash flow?
You'll minus the sales and
Inflow minus outflow.
operating outflow, yeah. Then you
In
get
the
the net
first
cash
year, you
flow.
have negative flow.
Yeah,
Second year, inflow
you'll have a
minus outflow.
positive. Yeah,
Third year, inflow minus outflow. Fourth year, inflow
hmm.
minus outflow. You get a net
Yeah.
cash flow. What is your total net cash flow for all the 4 years?
Wait, I've calculated it. It is 55,000
Positive, negative?
positive.
159,000 plus 75,000 plus 19,000 minus 198,000. You're
198,000.
55,000 positive. Okay.
Hmm.
Then they want a statement for year net cash flow from year 0 to 3 for model IM8.
Hmm.
Okay. 0, 1, 2, 3. Purchase price this much.
Hmm.
Now how you do the sales?
You'll do the same thing only, but instead of using 15,000 for year 2, you'll use 18,000 only.
So 12, 18 and 10 multiplied by
Yeah.
52. You get sales.
Yeah.
Operating costs.
You'll do 4.8 into 12,000 into 4.
Okay. Then again 4.8 into 18,000 into
80,000
4.
into 4.
Okay. Then
Then 4.8 into 10,000 into 4.
for year 3.
Hmm.
This one.
Hmm.
Okay. Then other fixed overheads.
You'll do 420,000 divided by the useful life. You'll get
140.
140,000.
From
And
the
you'll
fixed.
minus that
Yeah.
from the fixed. Yeah.
So 215,000. So you get your net cash flow.
Yeah.
What is total net cash flow?
1 sec. It is negative 247,000.
Then the
No, 1 sec, it's wrong, sorry. It can't be negative that much. It's positive 270.
375 plus 178, 600 plus 113,000 minus 420,000. So it is going to give you 246, 600.
Positive, yeah.
What is the B part of the question? Two advantages of using NPV.
Hmm.
What is the advantages of using NPV?
So I wrote the first two. It takes into account cash flow, which is more objective than profitability, and it takes into account the time value of money.
Very good. Now the C part. What is the C part? They want you to find the NPV of each model.
NPV. Hmm.
So net cash flow multiplied by the discount factor, you get the present
The
value.
present value.
Discount factor for year 0 is always 1.
1.
And for these, it will be this.
Hmm.
Okay. So for your first machinery, your outflow is this much, inflow is this much multiplied by the discount factor. You will get a positive present value.
Yeah.
And for IM8, initial year, there is an outflow, discount factor 1, you will multiply, you will get this. So you are getting a positive NPV over here also.
Hmm.
Correct?
Yeah.
After that, what they've asked you to calculate? Advise the directors which model you should choose. Can you give me the advice, please?
1 sec. I'll have to refer to the.
And
So
it is on my
they
phone.
should. Okay. So if you take the NPV into consideration, they should pick IM8, the new machinery, because it has a greater net present value
Okay,
than
one.
IM3.
Okay.
Then the in the first sum we calculated the net cash flow. The net cash flow of IM8 is greater than the net cash flow of IM3.
Okay.
Then in IM8 you won't have to repair it,
Okay.
and you can use it straight away.
And you're using less hours in IM8.
Yeah, and you get to produce more in IM8. There's no restriction of only 15,000
But some
units
negative points also.
of IM8 will be that the company has not used it before,
Mhm.
so they don't know how to use it.
They have to train the workers. Also, the initial outflow is more for IM8.
Yeah,
Okay. What would you suggest?
to buy the new machinery IM8.
There is no cash flow problem.
Mm.
Okay. Read this question.
Calculate the change in NPV of IM3 if the additional cost is incurred.
Hmm.
Which
Tell.
for which additional cost?
800.
Now listen to me, Amaya. The
Yeah.
question is that if you do additional improvement for IM3, for which
Hmm.
machinery? IM3,
First one.
the first one, the production capacity would increase to
That's
18,000.
overtime.
Yeah.
In IM3, the production capacity initially was how much?
It was 15,000.
Okay. And if I do this additional cost of 5,000, I would be able to produce instead of 15,000, my sales would become 18,000,
Yeah.
means 3,000 more.
Hmm.
Sales would be for 3,000 more.
Yeah.
And the variable operating cost would be for more 3,000 units.
Yeah.
So that means the only thing that would change is that in year 0, you will have an extra initial outlay. And in
Yeah.
year 2, you would spend for the variable cost for 3,000 units and you will earn the income extra for 3,000 units.
3,000 units.
With
Yeah.
me?
Yeah.
So they want the change in NPV.
Hmm.
Because they want the change in NPV, I will only take the changed cost and changed revenue.
Yeah.
My change cost for year 0 would be the initial outlay.
Yeah.
Okay. Variable cost is not changing. There is no sale. So the net cash flow would be 5,000. Discount factor 1. Present value would remain the same.
Hmm.
In year 1, will there be any changes in the sales or the cost?
No.
In year 2. In year 2, we will have a change. We would have extra variable cost for 3,000 units
Yeah.
into 4.80 per hour
Hmm.
into 5 per unit.
Hmm.
So for year 2, my extra variable cost would be 72,000.
Hmm.
Okay. In year 2, my sales would be increasing for 3,000 units.
Yeah.
3,052. So my sales would be 156,000.
156,000.
So the net cash flow would become 84 positive.
Yeah. And you multiply it with the
The
discount
change in
factor.
year 1 and year 2, year 1 and year 3, the change would only be in year 2
Year
because
two.
of the limit on the capacity.
Yeah.
So you multiply it with the discount factor, you're going to get 66,948.
Hmm.
Because of doing this extra cost, your new NPV would become how much?
61,940.
948.
940. Hmm.
Yeah. What was your
Yeah.
old NPV?
Old NPV. One sec.
Was 9226.
Yeah. 9226.
So what would be the change in NPV?
The 61.
Improvement cost is happening when? At the end of year 1, right?
Yeah.
It is not happening in year 0. The improvement cost, the initial outlay is happening at the end of year 1.
Okay.
Okay, so the discount factor for year 1 is 0.893.
Hmm.
Okay, so 5,000 into 0.893. So this is 4465.
Yeah.
Yeah?
Yeah.
Okay.
So you
Just
minus 44.
get the information. So improvement
Yeah.
was happening at the end of year 1. So
Hmm.
now you just incorporated the changes. Okay. Your old NPV was 9,226. But if you do this change, that means you do an extra expenditure of 5,000, you would be able to increase the income of
Hmm.
3,000 units. So what is the
Yeah.
net increase or decrease? They want the change. So I just incorporated the change that will happen. So the change will
Yeah.
be 948 minus 44.
Minus 4465.
So it is going
So
to
it'll
be
be 62,483.
to 483. It is very important to understand that if they want the increase or decrease, so you just do the NPV of the change.
Hmm.
Are you with me?
Yeah.
So with this, we have completed the E part as well, and we've done the October-November 23 paper 43.
Hmm.
Sum of investment appraisal.